In this video, I decided to discuss the case for a stock market bottom. And you might say, what are you talking about? You keep doing those market crash videos. How are you talking about a bottom? Well, I'm not saying the market has bottomed. My thesis is that the stock market hasn't bottomed. But I am not a one bias or a one-way type of investor where I'm just a perma bear and I don't think of ways that I could be wrong. I always look for signs or indicators that could tell me that I am wrong, so I can change my positions and act accordingly, as I'm putting my money where my mouth is. Every time I say the stock market has bottomed, I am positioned accordingly. When I say, I believe the stock market has bottomed, I'm also positioned accordingly. I don't do those things just to get views here on YouTube. I'm just sharing my thesis of what I'm doing in my portfolio, and many of you find it helpful. And there are actually some signs and some things that could potentially happen where the market crash thesis is completely wrong, and maybe we did bottom on the S&P 500, and maybe we're on our way to all-time high. So I decided to discuss all of that in today's video, so I really hope you enjoy it. Now, a big part of my strategy is actually involved around investor sentiment and investors' behavior. Not what are investors saying, but what are investors doing. And this is one of the few ways that I was actually able to see the stock market crash in 2021 when I made this video saying why Michael Burry is right on the bubble. And if you remember back then, people hated Michael Burry. They were saying he's a boomer because he doesn't like Tesla and he didn't like Bitcoin. They were just loving Cassie Wood and they did not like Michael Burry, if you remember that, in 2021. Well, I was saying why Michael Burry is right on the market bubble, investors' behavior, and I was mainly discussing the 33-year-old Dogecoin millionaires and other young people, like a 12-year-old making $290,000 from NFTs, and it's just a whole bubble. I mean, these things just don't happen for random, and investors were looking at those people and saying, oh, this is what they did, so I'm going to do the same, and the bubble was getting bigger. This is one of the few ways I was able to see investors' behavior, that everyone was extremely greedy and no one really was fearful. And as I studied a lot of stock market crashes before, mainly because it's a hobby of mine to study stock market history, I came to the conclusion that long-term investors tend to become traders at a stock market bottom, and traders tend to become long-term investors at a top. And there's a good reason for that. For example, many long-term investors right now are trying to become traders. They are focusing on short-term catalysts. They are focusing on the Federal Reserve. Many retail investors, which I'm seeing everywhere, are looking at charts. They're trying to study technical analysis and a lot of things that normally traders do, and not really just very long-term investors, just like they were 6 or 7 months ago. Now, why are they doing that? Because mainly they want to feel that they are hedged. They want to, think about the downside because they lost a lot of money. But this is what you should do before the stock market crashes, not after the stock market crashes. And we can really see such behavior with leveraged and inverse ETFs like the SQQQ, the XPXS with the S&P 500, 3x short. A lot of retail investors are trading those, leveraged products, one of the highest ever pretty much since 2015 in terms of the inflows. If you look at the SQQQ, traders pumped $658 million into bet against tech stocks. Now, yes, maybe some institutional investors are actually trading those type of ETFs, but I believe it's most likely retail investors, as they don't really like, using options. They can just buy it and they say, I'm short the market or I'm buying the market. And I can really see such behavior from my own videos. I used to get much more views in 2021 when I'm doing an analysis on a certain company. Now my analysis video pretty much get very little views, and most of my views are actually going around the Federal Reserve and the whole stock market, which is why you're seeing a lot of other people on YouTube making such videos, because they get way more views than pretty much anything else. But I'm going to keep making analysis videos on YouTube to make sure that we all stay on page, we don't just all become traders. And this is why I tell the people in my group that as we're crashing in the stock market, we have to look for companies that are high quality, long-term holds. We don't want to be trading the bottom and then we miss the bottom, we go to 4,600 and then we're not owning anything. We want to own something that's undervalued, a high quality type of stocks that's a long-term compounder that we can buy and hold forever. The best time to be a long-term investor is whenever the stock market is crashing, as you could buy things for cheap. But investors are doing the opposite and they are turning into traders, which would show me typically that we are somewhere close to a stock market bottom. Maybe maybe we did bottom, but I believe that would actually show me that we're somewhere close. Unless maybe retail investors just got too smart this time, and maybe this time is different. But historically, as I studied in my stock market crashes that happened before, long-term investors tend to become traders pretty close to a stock market bottom, and we're seeing it this time. All right. Now, the second thing with investors' behavior is around ARK Innovation. And not just with ARK Innovation, but with other investors. For example, there was a lot of YouTube channels in 2021 that they were only focused on growth stocks. They did not own any value stocks. It wasn't for a trade. It was just a long-term investment. They were really focused on just buying growth stocks. Well, now you're not really seeing it much anymore as you used to in 2021. Many of the people that did buy a lot of growth, which I'm not going to name, now they are suddenly just investing in profitable companies and investing in large cap, NASDAQ and S&P 500 type of stocks. Many of the other people who had a lot of growth stocks, they deleted their channels, and that would normally show that we're somewhere close to a bottom, at least with such names, especially as ARK Innovation is trading at COVID lows. So in terms of investor sentiment, I believe it's very, very bad around growth stocks and the growth type of names. But ironically enough, they really loved them in 2021, and then in 2022, they don't want them anymore. And of course, personally in my portfolio, I'm looking to buy into those stocks again. I did buy them in 2020 whenever the Fed cut interest rates. They went up between 300 all the way up. I had a stock up 500%. I sold a lot of them in 2021. And now in 2022, I'm looking to buy them again because I'm not a one biased type of investors. I'm just, looking to make money in the stock market. And I think they could potentially give me returns, and especially if the right environment is good for those stocks, and if it comes in the future, with the Fed cutting rates, inflation coming to 2%, and then we could have some type of recovery. That would be an amazing buying opportunity in many of those stocks. Not all of them are going to zero. Maybe there's some gems between those, high growth stocks. I'm personally going to be looking for them, and I'm not ashamed at all. I'm not running away from me, wanting to buy growth stocks again in 2022, like many people are just shying away from anything around growth because they just went down. And then again, from investors' behavior perspective, that would show me that we are somewhere close to some type of a bottom between those two things. Now, as you can see in my other videos, I was also saying that we are not close to a bottom, which is why there are a lot of different variables and things, and we have to take them all into consideration, not just looking at one side of the equation. All right. Now, this is the only thing I'm really worried about with this whole, market crash type of thesis. And I believe it's one of the only ways that I can be wrong. Now, of course, there are other ways I could be wrong, but the main one is around earnings. And if earnings came better than expected, or even the same as they are expected, I believe the market crash is not going to happen. I believe it already happened, and I believe we actually bottomed on the S&P 500, which the consensus is 230. If we can hit 230, then I believe, we're really fine and we're going to make new highs in the stock market in the future. But if Morgan Stanley is right and we hit 195, you're looking 3,000 on the S&P, or less than 3,000, 2,900 pretty much on the S&P, to a maximum of 3,300, which would not imply a bottom. But if we think about it very well, what could potentially boost in EPS growth? Which this is the way that I'm not really seeing it. I look at the consumer, I look at the trends with inflation, everything like that. I'm not seeing anything that could imply an EPS growth going into a 2023 global recession. But there's only one thing that could potentially change it, and this is the Fed pivot. If the Fed does pivot before anything breaks or before something bad happens, which I don't believe they're going to do, because if they do it, inflation expectations are going to go up, and then inflation is going to pick up, and then Powell talked about it thousands of times. They have to hold rates for longer. But if they do ever pivot before, something serious happens, the dollar is going to crash to pre-COVID levels, and this is going to give many companies currency gains instead of currency losses that they are experiencing, and this is going to boost their EPS growth. You see Apple, they suffered a 6% loss in revenue growth just because of the strong dollar. Well, that's another extra 6%, which I'm not sure if it's factored in the 230 EPS or not. But if the Fed does pivot before anything bad happens, I believe the stock market might not actually, go as bad as people think, although we historically crashed on a pivot. But we crashed on a pivot in very bad times. But if the Fed pivots in what we have right now, which are not very bad times, I believe that would, prevent the earnings recession that I'm really talking about in my videos. All right. So that was a lot of counter arguments around my thesis of the stock market crash, which is why it's important to look at different variables and be aware of potential risks that could put our thesis in danger and will really help us act accordingly in our portfolio so we don't really get hurt just, being all in on one side. All right. So this is my video for today. I hope you enjoyed it. If you did, please press the like button and maybe consider subscribing. So I hope to see you in another video.